Okay, hi everyone. Welcome to today's 2024 update on the employee retention credit, subtitled potentially, "Where is my money?" I think a lot of people are signing up for this to get a sense of where the IRS is today with respect to some of the refunds that may be outstanding, but we're going to talk about a lot of issues, including that. Joining me today is my colleague Deb Walker, who is the Director in Compensation and Benefits here at Cherry Bekaert. And I am Marty Kiernan. I'm the partner in charge of our tax credits and incentives advisory group. We're a group of about 50, plus actually growing and growing, that focuses on everything clearly from employee retention credits, but also to some of the R&D credit work, cost segregation studies, and a lot right now in both, we'll call it the state credits and incentives world, both for statutory and site selection, and then also Inflation Reduction Act type credits right now. So with that said, Deb, I don't know if you want to take a minute to introduce yourself, because you're going to be going back and forth with me through this thing.
Name's Deb Walker. I've been doing accounting for a very long time, tax accounting for a very long time, compensation and benefits, and that slips right over into employment taxes. So I got very involved with the ERC, and before that with PPP loans at Cherry Bekaert. So we've been very busy helping all our clients with both of those, and now focusing more on some of the IRS controversy work that's coming up.
All right. So today we're going to focus on a number of things. Part of the messaging here is like what to do now, and some of the benefits of working with an accounting firm to the extent you need to figure some of that out. We're going to talk about some pending legislation that may or may not pass. I'm of the inclination that it won't anytime soon, but we'll talk about that. We'll just go through generally ERC eligibility, talk about the moratorium on processing, which began last September and continues to today, but hopefully not for too much longer. There's also a program to withdraw a claim to the extent you haven't gotten any of the cash back, and that goes along with some of the work the IRS is doing in highlighting some of the promoters out there who may have provided, we'll call it like, I don't know, lazy advice or something like that with respect to some of our clients, or some people out there that may have claimed and decide they may not have a valid claim. There also was a voluntary disclosure program, which we'll talk about, which ended in March, and there may be another one at some point in the future that allowed taxpayers to actually give some of the cash back, less 20% on what they received. We'll talk a little bit current state of the IRS. A really interesting thing around protective elections, due to the fact that when you file for an ERC, you are supposed to make a corresponding amended return or some kind of potentially AAR adjustment to your income tax return back to the 2020 or 2021 years regarding a reduction in your expenses for wages. And there's a little bit of a disconnect in terms of the timing of some of that for some taxpayers who don't want to necessarily make that reduction and file it until they get their ERC money back, but they're still waiting for the ERC money. So there's some protective stuff that can be done. And just a little bit of the IRS's recognition of some fraud in the system. We have some polling questions coming up as well for CPE, but why don't we get into it? This is really just sort of the benefits of working with an accounting firm, as opposed to, and this comes up a lot with respect to ERC overall. There had been and have been and are just a number of, we'll call it ERC specific consultancies that did nothing else or did ERC more than anything else. And this is where we see a lot of taxpayers getting into trouble with respect to some of these, what we'll call promoters, who were pushing them to claim ERC. You saw it quite a bit in some of just the advertisements. You still may hear some of it out there right now, but it was everywhere from TV to radio to podcast. Everybody was pushing an ERC. Going forward, to the extent anyone out there has any questions regarding the validity of their claim, how it would stack up in an IRS exam, the strength of any documentation that's been pulled together, we are always happy to provide a free assessment. And that's some of the benefit here of us here at Cherry Bekaert, is making some investment in clients who may want to work with us, so we can at least take a pass and see what may be necessary for them on a complimentary basis. Now, we don't do any contingent fee work in this area. We're not even permitted to with respect to federal tax credits. But we also make it a point to not just focus on ERC, to the extent there are other opportunities like R&D or cost seg or state C&I, new markets credits, energy tax credits as well. We're going to look at all that. But it's just an invitation, should anyone have any questions after this to reach out to us, and we're happy to give you our 2 cents and help you figure out the way forward when it comes to where you are currently with your ERC. And that can be everything from analyzing what you've done, what you've gotten, to potentially like helping you reach out to the IRS to figure out where it is in the queue.
And Marty, one thing I would add is, over the years, it seems to me that working your choice between a law firm or an accounting firm, the accounting firm is usually much more practical, sort of we're not here to spend our days forever arguing with the IRS. We're here to get this case closed as quickly as we can and pay as little money as we can, hopefully no money at all. Whereas attorneys are often thinking about, well, we could go to court, or we could argue this, or we could argue that, as opposed to the more practical approach of, okay, let's see what we have, what are the rules, and then going from there.
And it's an honest approach too when it comes to like us reviewing what there is. If we can advise that maybe you shouldn't, or maybe you should give the cash back, or potentially you should do a withdrawal, we're happy to advise that way too. We're really not looking for projects or to sell ERC. We're really looking to just provide good, we'll call it tax advice with respect to what you should do and the most way forward. All right. Okay. January 31st. The Tax Relief for American Families and Workers Act passed the House by an overwhelming majority. Nothing passes by an overwhelming majority. So at that point, that particular bill has in it the end of the Employee Retention Credit Program as of January 31st, 2024. It also has a lot of other stuff in there that is very pro-taxpayer. It has the delay and elimination retroactively for a period of time of the requirement to capitalize research and experimentation expenditures. It has bonus depreciation, it has child tax credit. It seems like something that would pass, but like all things, whenever there's a standalone tax bill, it seems to potentially get held up. So right now, it passed the House. It's been sitting in the Senate. We thought it might pass immediately, and what happened was we were working with a number of taxpayers who were thinking about claiming employee retention credits. We quickly got through the list of understanding those that did and did not qualify for it, and quickly worked with those that did to get it filed by January 31st. The thought being it would pass some time later and retroactively end the ERC program. Well, that hasn't happened yet. And our speculation is that to the extent you believe that you have a valid potential employee retention credit claim, you should still file it. Technically speaking, you can no longer file for the 2020 ERC that is past the statute of limitations for filing, which ended this past April 15th. And as it stands right now, to file for one of the 3 2021 specific employee retention credits, that statute of limitations ends April 15th of 2025. Again, it's hard to read the tea leaves and understand exactly what may happen with Congress. I highly doubt something will pass later that retroactively ends ERC back in January. If anything passes, that statute may be brought up to the date that it passed, or the date of enactment. But beyond the potential ending of the employee retention credit, which again, it hasn't. So again, I'm encouraging those that still have a potential valid claim we can help you investigate that. There are additionally some changes around statutes of limitation, and also some additional, I guess we'll call it, analysis of who is and not a promoter for purposes of the ERC. I don't know, Debbie, if you want to talk a little bit about what's hanging out in that bill that we may at some point see pass.
Yes, this bill had as revenue raisers a lot of modifications to the ERC provisions. One, Marty mentioned, was no claims could be filed after January 31st, but there were also provisions that enhanced the penalties for promoters. So 20 years ago, tax shelters were a big deal, and Congress enacted a lot of tax shelter provisions requiring, if you sold tax shelters, to provide your list of clients to the IRS. They're essentially taking these and increasing the penalties and applying the same rules to promoters that they applied to tax shelters, which you'll see as we get more into talking about what is the IRS doing, that they basically sat back and said, we think there are a lot of bad claims out here, but we think a vast majority of those bad claims are filed by some specific entities, sort of an 80-20 rule. And so let's go after the entities and let's go after all of the people that use those entities. And that's going to be the most efficient way to get the most fraud out of the system, so that most of the money that's paid is actually supposed to be paid and not fraudulent.
Excellent. So we shall see what happens. Yeah, I think we covered a lot of this here. Penalties specifically related to consultants and some of the promoters. Move on to stuff that I think people care about right now. I don't know, Deb, is there anything here you want to talk about? We might have covered it already.
Well, I guess the most important thing down here is the very last bullet extends the period to 6 years, so that the statute of limitations for filing tax returns is usually 3 years. For employment tax returns, which is where the ERC is claimed, it's April 15th of the year following the year of the claim. So that's why the 2020 claims expired April 15th of 24. The 25 claims expire April 15th of the 21 claims expire April 15th of 25. But this bill extends the statute of limitations to 6 years. And so that gives the IRS plenty of time to keep going back. And as you'll see when we talk about what, in fact, the IRS is doing now, they are, in fact, going back to people they've already paid in 2020 and assessing the tax, basically saying you weren't entitled to it. If you disagree with us, they sent in March, 12,000 letters went out. They said, if you disagree with us, then tell us. If you don't disagree with us, we're going to send you a bill in 30 days. And in fact, the bills are sending, and their notices of intent to file a lien. So they are moving very quickly to get through the backlog. Of course, they started with 2020. They're going to move to 2021. And, it's just, you have to deal with it. Many of these claims, the IRS is wrong, or at least some of them they're wrong. And you have to respond to the IRS and point out they're wrong and get in a dialogue.
Yeah. So again, if anybody out there has any correspondence from the IRS regarding ERC where they need help responding in a way that's practical, that makes the most sense based on what their fact pattern is, we're more than happy to help. All right, our first polling question. Have you or your company applied for the ERC? I'm going to have to imagine this is going to be a high yes for those that may be on here. We'll see. Yeah, we'll see how this comes through.
One thing to highlight here, holding off because of the IRS moratorium, the moratorium is on the processing. It's not on the filing. It's never been on the filing.
Right.
So that's sort of as mistaken. And we do have one question. My company uses a PEO. Our credit was applied for by the PEO. The filing was 2 years ago and still hasn't been processed. Per the PEO, they've only had one of these processed. Is there any insight getting the IRS to move on these? It's very interesting. They are working with the IRS is working with the PEO community. Unfortunately, in the beginning of 2024, they came out with some guidance that said, by the way, PEO, you are responsible for your clients' ERCs. Therefore, you need to maintain documentation that proves the client is eligible for the ERC. And what's happening is that the PEOs never really approached in 2020 when the law was passed. They approached it to say, okay, client, tell me if you're eligible, we'll claim the credit for you. So IRS has kind of upped the game on the PEOs to say, well, you can't just take your client's word for it. I mean, you can, but you're responsible for these taxes. But it's not just the PEO, it's the employees, the clients of the PEO that are responsible for being sure that the credit is allowable. The filing was 2 years ago. Lots of filings are slowed down, and the only thing you can do, the IRS, of course, is not going to get between you and the PEO as far as when your claim's going to be paid. And the PEO is working with the IRS.
That's one of the biggest areas of frustration I find with taxpayers out there is when they're in the PEO situation, I get more calls about than anything else. Like, can I just go to the IRS directly about this? My PEO hasn't got, not really. You're working with your PEO. They're the one that has the relationship with the IRS for these payroll taxes. And so unfortunately or fortunately, you'll be forced to work through and with the PEO and communicate with them only. There really isn't much more that can be done. All right. All right. So results, 47% have filed, 31% have not, and not sure if eligible, still 18%, and holding off because IRS moratorium. I would just say this, like if anybody is truly not sure or holding off because of the moratorium, don't, because at least have it assessed as to whether it makes any sense. Because again, they may retroactively, they may later end the program earlier than a year from this past April. So I would say if you can get a claim in that is valid, that we can help assess that you have validity to that, and it'd be worthy. It may be a long time until you get the cash, but it wouldn't be a bad idea to get it in before the program disappears. Okay.
And yeah, I think everybody was shocked. All the preparers were shocked when the January legislation was passed the House. It had the January 31st date in it, and everybody was getting all their claims in by January 31st. I was amazed at the number of claims of clients that clearly qualified, and the claims were huge. And it just, I think what happened, and I would talk to some of these people and they go, yeah, I know, but I was just trying to keep my head above water during the pandemic. I didn't have time to worry about this. And it does take some time to pull data, but if you qualify, and even with that pending legislation out there that the claim might not in fact be paid, I think some of the numbers are so big that it makes sense to go ahead and file.
Yeah. Oh, I guess we'll talk about the moratorium in a moment. But let's talk a little bit about, I'll get to my point. Let's just talk about ERC generally and the eligibility. I think this might even be a little easier on the next slide where we look at this. Keep in mind there are 4 employee retention credits, or were. It began in 2020 as a one-time thing for from March 13th, 2020 through the end of the year, specifically for taxpayers who weren't eligible to get PPP, right? And so it was a much more defined group of potentially, we'll call it like larger taxpayers that might have had some of their operations shut down for a period of time due to some of the pandemic orders that were out there. Generally speaking, when you're claiming an employee retention credit, I'm sure for those who are listening who filed know this, but for those that haven't, what you're looking for is one of 2 things: some significant decline in your gross receipts / revenues in one of the quarters of 2020 or 21, comparing that back to that same quarter in 2019. For the 2020 rules, it was difficult to hit that reduction. It was required a more than 50% decline in your sort of controlled group gross receipts. For 2021, well, what happened was at the end of 2020, they expanded the program and added, in the end, 3 more quarters of eligibility. It was 4, but they took one away. That required only a more than 20% decline in 2021 quarters compared to the same quarters in 2019. It also opened up the 2020 credit for those that had claimed PPP and utilize it, just to the extent you could make sure in your calculation that you weren't double counting, such that any PPP funded wages also went into the employee retention credit calculation. And that continued on into 2021 as well, that rule that it opened, shall we say, the floodgates for everybody to look back to 2020 and again claim something where they had gotten PPP support, but maybe needed some more. It was true stimulus at that point. And then in 2021, either on a currently filed payroll tax form or potentially later retroactively to apply for these 2021 and 2020 credits. What we've seen is in 2020, I saw many more companies who were qualifying due to the government orders that were COVID-19 specific, that were limiting commerce, travel, or group meetings and causing a partial shutdown of a business. You saw this a ton in the restaurant industry, but you also saw it industry, I won't say agnostic, but somewhat. It's really like facts and circumstances to understand where the company's located, where its offices are located, what they did, whether or not they were sort of one of the businesses that, were unaffected by the mandates, and just understanding exactly how they were, what mandates existed, where they were, and then telling the story and showing how those mandates caused a partial shutdown on the business. It was tougher to hit that 50% decline. When we moved to 2021, it became much easier to file a gross receipts claim because we're only looking for a 20% decline in gross receipts, and you could look at quarters 1, 2, and 3 of 21 compared to either quarters 1, 2, and 3 of 19. And then you could also sub in one of the prior quarters, meaning that for quarter 1 of 21, you could actually use quarter 4 of 20 compared to quarter 4 of 19. So it was very flexible from a gross receipts perspective. Some of the government orders were still in place in early 21. Some of them began to be lifted in mid 21. So we saw a lot of this on a mandate perspective when we're working with some schools that they had somewhat of a steady revenue due to we'll call it tuition payments, but they had government orders that were limiting what they could do. When one of the IRS notices came out, I think it was in notice 2021-20, or potentially the next one, the IRS cited what's known as a supply chain disruption, which generally speaking means that, like, to the extent you were one of the businesses that couldn't be affected by one of the mandates, one of those essential businesses, but your suppliers were, and then that caused a partial shutdown down the chain to you. If you could document that and show who the supplier was and what the government order was on the supplier, and that supply coming to you actually caused a disruption on a more than nominal portion of your business, you could make that case. What happened was, I think many of the promoters out there grabbed onto that supply chain argument and really, I don't know, took it out for a spin. What I saw later was a lot of taxpayers just sort of generally citing supply chain issues in the air. Everybody knows there's supply chain issues, so therefore I qualify for everything. Well, the IRS later came out, I think last August, with some specifics around supply chain disruptions and what did and did not qualify. Specifically, they only highlighted things that didn't qualify. And so what it clearly stated, though, between the lines, was that if you have a supply chain disruption on your business, you need to cite who the supplier is, where the supplier is, what the specific government orders were on that supplier, and how that lack of supply affected the business and gave it what's known as a partial shutdown. I have been working with, and Deb as well, with a number of companies who, specifically in the auto dealership world, who we know had quite significant supply chain disruptions where their promoter really didn't document it very well. And so as a matter of, we'll call it preemptive IRS defense, preparing to the extent the IRS asks anything around supply chain, we've been doing some work to better document what the supply chain disruption was. And then in those cases, sometimes we'll find that the total claim that was put in was mostly okay, but maybe one of the quarters doesn't qualify because we couldn't find the government orders and show that how those disrupted. So the point is, if you did a supply chain disruption argument, we're more than happy to help give that a look too, because I do think that's one of the things the IRS will be looking at. And I think they're also going to be looking at companies that had maybe a significant increase in their gross receipts that they can easily track and look at the tax returns in 21 compared to 2019. So with that said, that's kind of the program in a nutshell. You can get a credit of up to $5,000 per employee in 2020. Again, statute of limitations has passed on 2020 claims, but you could have a maximum credit of $7,000 per employee for each of the first 3 quarters of 2021. So that's still, again, this is probably one of the most generous programs that have been out there, which is why it was so much, there was probably so much fraud around it, which is why the IRS put this moratorium in place that we're going to talk about. But it doesn't mean that if you are eligible for this thing that you shouldn't apply for it. I don't want people to be afraid of something that they're clearly eligible for. It's not, if you have correct facts, it's not that difficult with some of the experience of the accounting firms like us to document it appropriately and provide that to the service. Okay, I talked about this already. Okay, let's talk about the IRS moratorium. All right, Deb, correct me where I'm wrong here or add in wherever you like. But we have as surprise to everybody, September 14th, just before fall last year, the IRS put placed into service, began a moratorium on the processing of employee retention credit claims. Again, you could still file for the ERC after that point, but they're just going to put it in a holding pattern from September 14th through today, right? That moratorium said it wouldn't end before the end of last year. It still hasn't ended. And this is what I think is the most frustrating thing for our clients, other clients, just understanding exactly what's going on. Even some of the people that put in their claim before September 14th, the IRS, in order to come up with better processes to deal with the backlog that they had around employee retention credit claims, has radically slowed down the amount they were processing of the things that were even filed before September 14th. And everything that's been filed since September 14th or on or later basically hasn't been processed yet. It'll be marked as received, but it still hasn't been processed. And so what they said was, what normally would have been a 90-day processing time, which I think is for stuff that came in before that, automatically fit to double that to 180 days to come back. We've seen it take longer for things that were filed before September 14th. I'm still seeing refunds issued. I'm still seeing taxpayers getting them, but it's all for stuff filed before 9/14/2023, and it is much slower than it was before that time. Deb, keep talking if there's anything you want to hit on here.
Well, so there's a lot of questions in the Q&A that I think maybe we ought to at least answer some of them.
I can't see them, so if you want to go through them, go for it.
Yeah. So one is that nobody's gotten a letter from the IRS yet, this individual, but they have big issues with the Postal Service, so they're not even sure their claim was actually received by the IRS. So for that, you can call the IRS at 1-800-829-4933, option 3. 800-829-4933, option 3. And an IRS agent will pull up your file and tell you whether a claim has been received or not. And they'll also then tell you that the moratorium's still on and you'll just have to wait. Another person unfortunately says the payroll provider filed something on 2/1/2024. Well, the law, we filed a number, or we've had clients that have filed a number in February because for various reasons. And, hopefully this 131 deadline won't stick. The 131 deadline is part of the revenue waiver provisions, but so I think there will be some date that will apply. And as the next question asks, do you think it's the enactment date? And yes, it could be the enactment date. It could be the day they start talking about this legislation again. So it behooves people, if you've got claims, to get them in, notwithstanding the fact you're going to have to pay somebody to prepare all of this information and properly file it for you. But depending on the size of the claim, it is a business risk that I might take.
I would say, I want to add one thing to what the first question had about the mail and not being confident on it. If for some reason you find out it wasn't received and it's not a 2020 claim, you can still file, and I would recommend that you do it as quickly as possible if it were a 2021 claim, because as Deb and I are saying here, we speculate that whatever legislation may or may not pass, if it does pass, probably won't be retroactive back to January 31st. Again, that's speculation. I can't promise that, but I would be very surprised. And so I would say if you found out that for some reason it wasn't filed or it didn't get to them, you can still put it in if it's a 2021 claim. 2020 has passed, that's statute of limitations, but certainly
if you have documentation certified mail that you filed something in 2020 and the IRS doesn't have it, I've seen a number of things that were filed during that time period, whether it was the Postal Service or the IRS. So if you've got documentation, you filed it in 2020, I would file it again. And then when the IRS says, sorry, you filed too late, you're going to open up your conversation with, oh, well, no, I didn't file it too late. Here's my documentation. I filed it on time.
Is there anything else in the chat we want to hit right now?
So the other one is an interesting one. You're going to like this one, Marty. It's the fact that the third quarter, the government orders are CDC and OSHA guidelines. And the preparer insists that that's okay and is not going to refund any fee until the IRS disallows it. So what would you do? Should you, withdraw the claim? But I'm not sure your preparer will give you back your fee if you withdraw the claim. But of course, withdrawing the claim, you're going to avoid penalties and interest.
Yeah.
It's a tough one. And sometimes CDC and OSHA guidelines are incorporated in state rules. So the state has a mandate that says you will follow CDC and OSHA guidelines. But in most cases, there's the legal advice memorandum that clearly says OSHA and CDC don't issue mandates; they issue guidelines, and therefore you can't.
Let me jump in here with a little plug for what we may be able to do with that. Yeah, without a doubt, some of these consultancies, one in particular, basically just like cited CDC and OSHA guidance across the board for everybody and claimed everybody for every period all the time.
What we've been able to do in that case for some taxpayers that may be waiting or trying to understand exactly how good the claim is to find other mandates that aren't just CDC and OSHA guidance that actually predated COVID-19 and exist to this day. We've been able to do that successfully. Maybe we don't get it for all 3 quarters of 21. Maybe it's 1.5 or 2, but it's something you're going to want to know, especially as you're thinking about whether or not you should return cash that you got or withdraw a claim that you have. Again, that is something we'll call on a complimentary basis. We can give you a sense of like what we think it is because we've seen so many of them. And pulling government orders is not particularly difficult. We've been doing it for 4 years and we have them. But I would say, depending on the industry, depending on the location, overall, the facts, we can quickly say, yeah, you maybe should pull this thing back, or I think it might be worthy of further investigation, and we can give you some way forward there. Because you're not going to get anything from your consultant because, I don't know, you sign an agreement and they said they're going to handle all the IRS defense, and maybe you don't have to pay them anything until, or you don't have to pay them all the rest until you actually get the money. But I think proactivity is good on the taxpayer's perspective and getting away from some of those consultancies who are clearly, we'll call it like incentivized to their fee goes along with how much credit you get. Whereas like here, that's not the case. We're really focused on just providing what the best advice is. I don't know, give it a spin. We're happy to talk to you about like, again, what you should do going forward. So the point of this thing really is, as we go forward, is to be a resource one-on-one to anybody who might need it. All right. Anything else in there, Deb, before we go on?
Well,
I think this is an area people are going to want to focus on more than anything else in the thing. So I'm happy to leave it here and we'll buzz through and get some more polling questions in a moment. But what else we got?
Oh, just one last one, and there are a few more. Well, somebody mentioned daycare. We've qualified a lot of daycare, even though the revenues went up. Yep. But there's also servicing hospitals, and revenues declined, but not by the double digits. And I would say that's, yeah, we can talk with you offline about, because you should be able to, many people that serviced hospitals were able to qualify for the credit.
I mean, the revenue declines are an automatic qualification, right? If you have revenue declines that are, I don't know, 15% instead of 20%, and you can show that you have, it's not an and test, but it's not a bad thing to show revenue declines and also showing that there are government orders limiting what you can do. Technically, the gross receipts is not part of that analysis, but it's not a bad fact to show the service that like you may have a qualification due to your inability to provide services based on COVID-19 orders that were restrictive to what you normally did. All right, let's move a little bit so we can get to some more polling questions so people aren't just happy they got their advice, but aren't unhappy they didn't get their CPE. So with that said, we have an IRS program to withdraw claims, and there are 3 specific situations. This is all for people who haven't gotten or haven't, we'll say, cashed the check yet, right? That they might have gotten a refund. So there's guidance to withdraw in the situation where you've not received the refund and have not been notified the claim's under exam. 2, where you've not received the refund but notified that it is under audit. And then 3, if you've received the refund but haven't cashed the check yet. If any of those 3 things apply, you have the ability to
pull back your claim under one of three mechanisms, which Deb may go through here right now.
Yeah, so you can, basically, you're filing another amended tax return, but what you're doing is you're writing on the form withdrawn. And it's very important that you write withdrawn on the left-hand margin of the form and that you sign it on the right-hand margin of the form. So here you see a situation where IRS wants to have a program, and instead of designing a form for it, they just said, well, we can use this form because all we really need for you to do is say withdrawn and sign your name. So we'll use the margins on the form. We'll give you a fax number to fax it to, and it's as simple as that. No questions asked, no penalties, no interest, nothing. It's the way that the IRS said, we're going to get these claims out of here. People know they shouldn't have claimed. Somebody told them it's free money and they wish they'd never done it. And so give them an easy way to do it. And that is still open.
And then a little bit of an add-on to that, if you've been notified that it is under exam, it's pretty much the same before, right? But there's a little bit extra here.
Well, if you, yeah, then you have to work with your agent to do it. But yes, even if you are under exam, you can do that.
I guess the main thing here before we get to the next slide is if you got some money back and you're unclear and you haven't cashed a check yet, don't cash it yet. And then we can basically help you decide what makes the most sense. But you know, and we'll certainly advise you to cash it if it seems like you're in good stead. But here we go. Yeah, and this is the same thing here. Like again, if you've gotten the money, just don't cash it yet. If you have that option still, and there's a way to go through it to withdraw your claim in that particular case. So you can write void on the back of the check, provide a note that says ERC withdrawal, and you're going to end up filing and sending this back to the Cincinnati Refund Inquiry Unit. And again, track your packages. It's not bad for those that don't trust the mail system right now.
Yeah.
All right.
We up to a polling question?
Yeah, I will do this polling question, and then I would say, Deb, if there's anything else in the chat we want to do while that's going on, why don't we take a look? But like, do you think you may be eligible to claim the ERC but have not filed for it yet? Yes, no, or I don't know. So this is the next one to pick for your CPE credit. Is there anything else in there, Deb? Again, I can't see it.
Well, there's a lot in here about working with PEOs and how can we be sure the PEO did what they said they did, and IRS won't talk to us because it wasn't filed under our EIN number, even though it was reported by the PEO. Unfortunately, the only thing you can do is work with your PEO. And, you know, yes, I hear a lot of people that are frustrated by that, but that unfortunately is the only way you can get a status check. The only way you're going to get your cash is through the third-party payers.
And we're working with some PEOs right now to help them assess we'll call it documentation that they have on hand for money they've received to get out. So certain PEOs have some of the cash. They're going through their processes to distribute some of this stuff. I have just found no names being mentioned here, but like certain PEOs have been pretty bad on communication when it comes to some of their clients about letting them know about what to do and where it is in the process. I think in some ways it's the PEO's fault, but maybe not, because they really weren't built for refunds as much as they were for like the general like administration of payroll tax. This thing kind of hit everybody by surprise, and just due to the relationship with both the taxpayers and with the IRS on behalf of the taxpayers, it just created an entire new workflow for them to have to adapt to and go through. And so I have sympathy on both sides for the PEOs and also for the taxpayers that are working with them due to the fact that they can't go directly to the service and ask the questions. All right, so do you think you may be eligible for the ERC but have not yet filed? Yes, 11%. I'm not surprised, it's quite low. Again, any of those 11% on here that want to just hit us with an email or give me a call to assess what that is, we'll take a look for free, and the sooner the better, in case you think, you know, in case some of this future legislation passes. All right. Okay, voluntary disclosure program. Let me give this at a high level, and Deb, if there's anything else you want to add. Back in December, the IRS came up with a very, very, I would say, generous program to allow taxpayers, and this again, we were talking before about if you hadn't gotten the money, this is if you had gotten the money, and you came to the conclusion that potentially you didn't actually qualify for the employee retention credit, what they were recommending is like work with your tax provider to make that assessment beyond maybe just a consultant that like sold you a contingent fee project. And if you found that like you actually don't believe that you qualified, you could give back the cash all in almost a no, I won't say no questions asked, but like you can give back 80% of the cash and hold on to 20. The thought being that you probably paid something like 20% to your contingent fee provider, while at the same time essentially naming names, letting them know who that contingent fee provider was when you give back the cash. When it was published, and I was looking back in March, that the IRS mentioned something like 250 million returned. Since that time, I think it's up to $1 billion under that particular program that had been returned. So clearly there were a number of people concerned, taxpayers concerned about the fact that they may not have qualified, and were probably more than happy at that point to just almost call it even by holding on to 20%, or basically like giving back only 80%, knowing they paid some of the contingent fee provider. I think they got to hang on to the interest too, isn't that right, Deb?
Yeah, that's right.
Yeah, if the IRS paid them interest on the claim, they actually got to hang on to that too, with no income pickup. So it's one of the more generous programs. It ended in March, on March 22nd. It lasted from December, I think 21st, 22nd, 23rd, until March 22nd. I would not be surprised if we see another voluntary disclosure program at some point in the future under the same terms, probably less generous terms. You generally find that the IRS will provide a program, and then if they reinstate it, maybe it's less generous than it was before. But it all depends what their priorities are, and we shall see. I'm just making this up as I say this, but as we see the moratorium end at some point, which, by the way, I don't think I've said this out loud, but I think something that was published in March by the service said that it was intended, the thought was that it would end by late spring. It's pretty late spring right now. And so in the next 3 weeks, I wouldn't be totally surprised if we saw the moratorium end and we saw a new voluntary disclosure program or something like that come around too at the same time. So I guess what I can say is the best information out there is that which is published by the IRS back in March, about some speculation that it was intended that this moratorium on the processing of claims would end by late spring of 2024, which again is much later than anybody thought it would when it came out last September. But I just wanted to get that out there. So anything else, Deb?
I think the problem the IRS is having is that the voluntary disclosure program was used by a lot of people. There were a lot of complaints that it cut off too early, but they have moved a lot of people into reviewing the filings for the disclosure program, because you didn't actually, you had to file to see if you were accepted, and it's all almost automatic you'd be accepted, but somebody's processing these and multiplying something by 80% and then sending a bill. So it takes some work to kind of end all of this. And I agree. I think they'll have another program. And hopefully the moratorium will end this month.
I really hope so, on behalf of both me, you, and our clients. It would be to provide some very specific guidance in terms of going forward, as opposed to a little bit of wait and see and constantly just trying to like figure out what's going on. So it's not particularly popular among taxpayers right now, but we shall see. All right, IRS exams. And I'm going to maybe speed it up a little bit through some of this right now, because I think we have only 10, 12 minutes or something like that to get through the rest of this. I want to make sure we hit both our polling questions. And also I'm going to have Deb keep an eye on the chat here. But in terms of current state with the IRS, where are they focused? They're focused on their exams, where they're moving from 2020 to 2021 specifically. They're doing investigations into promoters. Again, I think promoter in this case is really going to be a lot of the contingent fee providers. Specifically, if you find any with the name ERC anything in their like business name, clearly they were set up to be an ERC promoter. And so I wouldn't be surprised if they're the ones that are involved in this more than any others. And they've had some criminal investigations as well. I think more of it goes around the promoter side than it goes to the taxpayer side, for sure.
Yes.
Yeah, without a doubt. So again, I don't want to scare anybody like the IRS is coming after you with a criminal investigation. It's not. It's really coming after you with potentially nothing or some questions that they have around the employee retention credit. Again, you may also come to them with a valid claim that is yours to claim to the extent you actually qualify. Leave it at that for a moment.
I mean, going after the criminal, bringing in criminal investigation lets them take a whole block of claims and work with the promoters to get them out of the IRS system. And, their whole problem is processing, massive amounts of these claims.
Yeah. And again, this voluntary disclosure program fed well into their focus on promoters, because when you're giving back the cash, you're identifying who talked you into claiming the ERC. So again, none of the taxpayers we work with have had to do anything like that for purposes of doing their ERCs, but I have worked with some who work with somebody else, and we have advised them to give the cash back. So I am, we help some taxpayers there.
We also see, and all accounting firms see, when the financial statement audits are prepared and we have to approve the accounts receivable or the income that was recognized for the ERCs, that the auditors, we can't sign off given the documentation that's available. And so in those cases, people are using the withdrawal or the voluntary disclosure.
So here's the stuff, real quick, here's the stuff the IRS is looking for that they're kind of like triggers for them, little red flags where they have too many quarters being claimed. I've seen that, where they have companies with no employees claiming it, or they're citing government orders that don't qualify, specifically those CDC and OSHA guidelines without anything else specific. That's generally not enough. Too many employees in the count, some overlap with the PPP, again, where they have supply chain issues that aren't documented. Claiming ERC for too long of a tax period, that's an interesting one, because, under the gross receipts test, you get the full quarter. Under the government order test, you get the date until that government order was lifted, irrespective of how your business affected day 2 after that thing was lifted. So technically speaking, you have to make sure under a government order test that you're not just claiming the whole quarter. You have to be in that claim on the date that that government order was lifted. Again, what they say is, where the promoter says, you have nothing to lose, you might as well file a claim. Well, clearly a red flag for them, and they see that in the advertising. I think that's been out there. All right. In terms of things the IRS is looking for in its information document request, some of this goes and overlaps with the FFCRA credit, the Families First Coronavirus Relief Act. That was specific to, we'll call it the COVID sick leave credit as well. But they want to see what your originally filed Form 941 was. They want your payroll journals. They want the backup of your gross receipts. They want to see if you had people who were claiming family leave. To the extent you're claiming that thing, you want statements that were required to be provided by the employees around the COVID-19 reason they were reporting the family leave. Also, though, when we get to ERC stuff, they're going to want the business income tax returns, because here's the deal. It should say 20 and 21. Sorry about that misstep. Here's one of the things. When you file an ERC, again, you're supposed to reduce your deduction for wages, which is an income pickup in that 20 or 21 year. I am reading and hearing that to the extent you haven't gotten the money back and the IRS has made the determination that you haven't made that corresponding reduction to your to your wage expenses back in those days, they could potentially use it as a reason for an unperfected, shall we say, ERC claim and deny it, because it's two-pronged. You have to make the filing of the amended Form 941X, but then there's the corresponding reduction to the wages back in that year. There's potential the IRS could look at that and say, if you didn't make that corresponding deduction, even though you haven't gotten the cash back, reduction in deduction, even though you haven't gotten the cash back, that's some indicia on the part of the taxpayer that they shouldn't have gotten the thing anyway. So we'll leave it at that, but I just want to keep that in mind, that there's an income tax component to this as well. Again, this isn't totally free money. You pick it up in income, but not when you get it. You pick it up in the past, in the year to which the ERC relates.
Yeah, so it's important that your return be amended before the statute of limitations.
Yeah.
And people say, well, but I haven't got my money. What if the IRS disallows it? Then my statute of limitations on the income tax will have run, and then I lost both. And I shouldn't have to lose both the deduction and the credit. And the way to protect against that is to file a protective refund claim. So you file your amended return and disallow the deduction because you filed the ERC claim. Then if eventually you don't get your then right after you file that, 2 or 3 days later, you file another return that says protective refund claim across the top. You don't say what the refund amount is because you don't know what it's going to be, but you say $1 or some amount to be determined. And then that second return is filed immediately. IRS gets protective refund claims. They put them in a box and wait until, in fact, the taxpayer comes back in and says, okay, now I have to perfect my claim. And when you perfect it, you actually show what the adjustment is and you'll be entitled to the refund. So you should, although it's not guaranteed the IRS will accept these, they haven't said anything about it, but I think a number of people are filing protective refund claims such that they protect themselves on this disallowed deduction in case the IRS, for whatever reason, doesn't pay their claim.
I think that's one of the biggest takeaways from this thing. Like if you haven't made that reduction to your deductions back in that year, and the statute may close on that soon, please call us. We can help you through the mechanics of this and help protect you while you wait for that money. All right, polling question 3. Which of these may be a warning sign for risks for filing ERC claims? These based on a percentage of the credit claim filed, total reliance on the employer to determine if qualified for ERC, a 2-minute online application, OSHA guidance is a government order, or any of the above. It's going to be hard to get a wrong answer here. I'm just going to say that. I'm not, without giving away the answer here too much. But one thing that's interesting here where it says total reliance on the employer to determine, this is what some of the promoters were doing. They would essentially half educate, shall we say, our taxpayer claimant about the employee retention credit and then rely on their statement back. Oh yeah, I definitely qualify. And then that's enough. And so again, if you found yourself where you were telling them that you qualified as opposed to them telling you as a result of investigation and work that they had done, and you signed some kind of reliance letter that they can depend on, again, that's going to be a red flag to the service and potentially to you to make a further investigation. In a lot of times, but
well, there's one more question here that what about a business is closed since the ERC claim was filed? And when the ERC gets processed, are they going to pay the business that's no longer in business? Yes. I would say if I had a business that was closed, I would keep filing tax returns with that EIN to make sure that it's not really closed, it's just inactive, because that claim will be paid to the EIN that exists. So that's how I would treat that.
Yeah. All right. Okay, any of the above? Everybody got this thing right. Cool. All right, let's move on. All right, we have 6 minutes, and fortunately, we have talked about much of what is in here. So let me buzz through this a little bit at high speed, and then we'll get to the polling question and talk through whatever questions may come in as well, and anything we see in here is interesting. So here's the deal. IRS Dirty Dozen, 2 years in a row. Last year it was number 1. This year it's number 11. Employee retention credit, but it's still there. It's still within the Dirty Dozen. Basically, again, some of this stuff I talked about, some of the warning signs for ERC scams, but it's just saying that this is on the IRS's radar as a tax shelter or something like in that vein, right? Employee retention credit, but something that's out there for potential abuse. Again, I don't want anybody to be afraid of the fact that they filed an ERC if they did it with, a reputable CPA firm. Or a reputable law firm. I would just say maybe take a second look at it if you did it with one of the ERC branded consultancies out there. Another thing here, basically they're treating ERC overpayments as a tax underpayment in terms of how they can assess and come after you. So that's just a very clear, it gave them somewhat authority in terms of the way that they address some of the overpayments. So
it gives them the ability to come after you even after the statute of limitations run. So the rule was that if you file a refund claim, the IRS has 2 years in order to examine that claim and come back and get it. they paid you or not, or deny it. So, well, it's 2 years after they paid you, so to come back and get it. IRS used to have to go to court in order to activate that. They modified the regulations in July of 23, so they don't have to go to court anymore. And so essentially, the statute of limitations on having your claim gobbled back up, if you would, by the IRS is 2 years after you receive the checks, or the April 15th date, whichever is later. So some of the 20, that's why IRS still has time for some of the 2020 claims to come after them.
So this next thing is the thing that frustrates taxpayers more than anything else, because what happens is we'll have a client who didn't work with us, maybe worked with a consultancy out there to claim the employee retention credit. We then have to, what we talked about, doing the amended income tax return to reduce your deductions by the amount, wage deductions by the amount of employee retention credit. To the extent we don't believe it's a valid claim, technically speaking, from an Office of Professional Responsibility perspective, the IRS is coming after preparers like us. So saying that we would be perpetuating potentially the fraud or the invalid ERC claim by making that reduction in deduction. It's a strange thing when you're doing something that actually increases the amount of taxable income that goes and tax liability that would go to the government in a prior year. Nevertheless, you're viewed as potentially perpetuating the fraud. So what happens is we get a lot of frustrated. No, we have some clients who've worked with third-party consultants out there where they come to us, okay, cool, now reduce my income tax, and we say we can't, and then it becomes a whole battle a little bit about like us and also the potential consultant out there. And so it can be frustrating for a client to feel that way in the middle, and I totally blame the egregious tax shelter consultancies out there that not us, is just trying to make sure we're following the rules. Okay. Polling question 4, last one. Would you like to learn more about how we can help moving forward? Anybody who says yes, you're going to get the pleasure of a call from maybe me and Deb. I'm sure no one will say yes as a result of that, but we'll see. We're more than happy to reach out and talk to you. Again, we've had so much experience doing claims, defending other claims, documenting, also just talking to a bunch of taxpayers who didn't qualify and we never did anything for them. That is a ton of experience right there too, to help you understand whether or not you have a valid employee retention credit claim out there. I'm just going to say this. I think, Deb, any last questions that look any good?
Just one last one that says, what about additional guidance on protective refund claims? I don't expect any from the IRS. You can find it in the Internal Revenue Manual or give us a call and we can work through it with you. You mentioned first quarter 2021, so there's certainly time for a protective refund claim for that.
Absolutely. Send us an email, call Deb. We will be more than happy to talk to you about the logistics of all that stuff. And whether you work with us from a tax perspective or somebody else, we can certainly help. All right. So would you like to learn more? I'm just going to say yes to everybody on here. They probably do. I think we've been compelling, and I do appreciate everybody's participation today. I hope it's been informative. I hope it's not frustrating, considering the fact that we still don't know about the moratorium ending, but I'm betting my money that it's going to end after this month. We'll see how that works out. Please, maybe I'm betting your money. But with that said, thank you everybody for joining today. We really appreciate it. Call me, call Deb, email me, email Deb. We'll also be looking at any other responses into the polling questions, see if we can help. Thank you all. Take care. And
thank you.
Okay.
Bye.